Hello, welcome back to Mad Crypto. In this video, I'm going to be looking at something called Project Inverse. It is a counter volatility DeFi protocol, and I'm going to show you the website. We're going to go through that. We're going to look at the tokenomics. We'll look at some of their social medias. And before I get into that and we start going through that, I'm going to show you a video now, and then we'll be back after that.
The latter half of 2020 saw the rise of decentralized finance. Decentralized finance, or DeFi, offers the promise of expanding financial services to a broader pool of users. However, most DeFi coins remain extremely volatile. Introducing Inverse, a DeFi protocol that allows users to earn gains from the volatility of other DeFi assets. With Inverse, users stake and earn gains from the downward moves of select DeFi coins or a broader DeFi index. Users may set their desired risk and potential gains or choose parameters fixed by the protocol. Inverse is a decentralized protocol powered by smart contract. Users may also earn yield by providing liquidity to the platform. Inverse aims to drive the adoption of DeFi by allowing users to speculate on the movements of these assets. Inverse, fixed and flexible vaults, liquidity provider rewards, counter volatility yields.
So we're back now. That was a video showing you a bit about Project Inverse and the Inverse token. So staking is a huge thing, yield, all that stuff within the crypto space, and there's it's really become popular over the last year where DeFi has gone. DeFi's just rocketed. It's been one of the biggest it's one of the biggest sectors of crypto at the minute. After Bitcoin, DeFi is one of the biggest sectors in crypto, and it's the sector that allows the regular world and the crypto world to interact. So it does have a lot of potential, and this is the first time I've heard of an inverse staking. So all these staking programs, the yield programs, they're banking on prices and things going up. This is banking on the reverse. So in the same way that when people are trading, they go long and short. Here you can stake basically long and short, and how it's given a sort of it's not options at whatsoever, but in that feel of it where it's your staking, where it's a time limit and it's not a liquidation point or just a price limit. It's a time limit thing, so you can stake for the different amounts of time. So have a look through the website now and see what they have to offer. So here we're just greater market drops equal larger token gains, counter volatility DeFi protocol. So why have they done this? The volatility of the crypto markets is notorious and continues to hinder adoption of this groundbreaking technology. The volatility, I can see why that turns some people off, but if we look at any market, volatility is there. People in the crypto markets, the volatility is quite high, especially when you look at a lot of the altcoins. A lot of these altcoins, for a lot of them, is the Wild West. So volatility in them, yes, but volatility isn't necessarily a bad thing. If volatility wasn't there, this project wouldn't be here. So I don't look at volatility as a bad thing. It's just a part of crypto, and it's part of a lot of the finance world. You see, if you go into Forex or stocks, you go down to lower term time frames where Forex is more traditionally traded compared to where crypto would be. Low term Forex, there's loads of volatility. So this project benefits off volatility, but to look at volatility as a purely bad thing, it's not. Volatility is part of all markets. The how Inverse is an Ethereum smart contract enabled platform that tracks the movement of popular DeFi coins and allows users to gain yield from their volatility via the XIV utility token. So one area I will keep this in mind when we eventually do go into some sort of correction. We've had one for the last 2-3 weeks. If this is the end of that, then I don't know if this is the best time to be using something like this. But during the correction periods, and if we do go into a downward trend, if we do get that lower high on the weekly, which has called the end of every other bull run, if we get something like that, which is on the cards at the minute in terms of there's no way saying that's happening, but if you're just looking at the charts, that setup is there to possibly form. So if we go into a bear run, this would be something I'd be interested in definitely. So we'll just go through it again. It allows users to gain yield from their volatility via the XIV, that's the project inverse utility token. So they have flexible vaults and fixed vaults. With the flexible vaults, real-time inverse staking powered by the XIV utility token. Follow the price movements of popular DeFi coins, Link, Comp, Uni, and the inverse DeFi index as tracking vaults. So the DeFi index, that'll just be instead of picking your particular coin that you want to inversely stake in, the DeFi index would be a pool of coins, just a collection of coins that you're inversely staking. Sort of in the way the traditional world you have an EFT, a collection of stocks, DeFi, or like the NASDAQ, a collection of stocks, things like that. Inversely staking in a already set pool of DeFi coins. Send XIV tokens to tracking vaults and lock for 24 hours, 3 days, or 7 days. So with the flexible vaults, it's still not, you can't pick your time. You can't pick 2 days appears, you can't pick 12 hours. Flexible to the 24 hours, 3 days, or 7 days. Earn significant XIV token rewards if select DeFi coins or the index fall below a certain percentage, and that you were the person determining that percentage before going into it. So we have the fixed vaults. So real-time inverse staking powered by the XIV utility token, the same as the flexible vaults. And same thing, follow the price movements of the popular DeFi coins, Aave, YFI, SNX, and the inverse DeFi index via fixed vaults. Send XIV tokens to fixed vaults and lock for 24 hours. Earn significant XIV token rewards if select DeFi coins or index fall below a certain percentage determined by the protocol. So with the flexible, you're the one who determine the percentage drop you're hoping for, and for the fixed vaults, they're the one who determine the percentage drop. So here we have some of the integrations, the different coins. See the Aave, the Ethereum. There's loads of them. I'm sure Link is in there with Uniswap, Maker token. It's the inverse liquidity pool. You can also, instead of staking, you can add liquidity. So you connect your web browser, MetaMask wallet to the inverse protocol. If anybody, if you've ever added liquidity, this probably is a very familiar process to you. It seems quite foreign, or just a little bit complicated, or even a little bit scary to someone who hasn't added liquidity to Anthem before. But it's a very simple process. Just make sure you trust where you're adding the liquidity to. So connect your MetaMask to the inverse protocol, add XIV to the platform liquidity pool. The LP providers will receive ongoing XIV rewards from staking losses captured by the vaults. So when you're adding liquidity, the way you earn from your liquidity is the people who inversely stake when they lose. So if they're inversely staking and they hope the price goes down, when the price goes up and they lose, that's where the liquidity providers make money. So the protocol mechanism, counter volatility yields, decentralized inverse staking, fixed and flexible vaults, DeFi coin and index tracking, liquidity provider rewards. So here's some of the partners they have: Certic, X21, China Polka, BMW Capital. Let's click a few more. PlaySend, Polka Bridge, Firm Network, CIFA Foundation, Bidesk. I like seeing the Polka ones. Polka, Anthony C. Polka, it's all built on the Polka.net network. So we have like Polka Swap, things like that. And there's Polka Starter. There's an awful lot of things. Hotbit, they're another website I use. So we're partnering with a lot of companies. Here we have a bit of their roadmap. So in the Q4 of 2020, inverse protocol development commences. We've gone through that. In Q1 of 2021, it was the inverse token private and public sale. Q1 of 2021, the inverse token launch on Uniswap as well as custodial exchanges. still in Q1, XRY inverse token staking on partner wallet Unifier after the token launch. Still in Q1, inverse protocol smart contract testnet deployed. So in Q2, inverse protocol smart contract mainnet deployed. Still in Q2, introduction of the flash vaults and inverse vault pass. Still in Q2, addition of chain coins and indexes and NFT coins and indexes to tracking vaults. Adding the NFT coins, I think is going to be interesting, because I think that could give a lot of opportunity in this project, because most of the NFT coins, the NFT market is quickly, it already is very oversaturated. Everybody and anybody is trying to create NFT coins and something to do with NFTs, and a few of them, good ones, will stick around. The NFT space is a real space, but it is full of crap, and so there will be some amazing projects in the NFT space, and who knows if the projects that are currently around are going to be the ones that really make it, or will be new projects. But there is going to be a lot of downfall in the NFT projects once things finally start to dip properly, consistently. So once that starts happening, the fact that they're going to include NFT coins in this, there could be serious gains to be made. So in Q3, continue expansion of platform user base. Q4, inverse protocol peer-to-peer staking will be deployed. So like I said, the ones that haven't happened here, basically at this stage, just look at them as promises and you just track them to see if they are implemented on time. So here we have just some tokenomics. We'll go over to Coinmarketcap and look at these in a minute. So here we are on Coinmarketcap project inverse. The link for this and the link for any pages I show will be in the description. So the current price of the coin is 0.1824. That is down 4% today, but I wouldn't worry about that too much. Overall, the chart is quite stable, as with any crypto project, ups and downs, but it doesn't have the crazy signal of some of the real, like the pump and dump coins that are just stagnant for ages, crazy up, straight back down, and that. It does look, as a beginner crypto project, this looks like quite a normal chart. Nothing bad to me there. I'm going to see how far it goes back. So March 10th, 2021. So there's very little of it on CoinMarketCap. It's one thing to keep in mind, just to watch out for. Just watch how that develops. So the current circulating supply is 13.9 million. That's 15% of the total supply. Total supply is 90 million. Max supply 90 million as well. So they can't just print more. There's a set supply. The 24-hour volume 560,000. That changes daily, so we're not going to worry about that. But the fully diluted market cap 16 million and the market cap 2.5 million. So it is very low. The market cap is very low. If this project does take off, which I think we could need more of a prolonged correction for this project to really take off. Or there could be interesting ways where people implement this as a hedge in their own trading as well, depending on the rewards that you will get from the inverse staking. It could be an interesting way to perform a hedge if you're trading long. But that is, there we have, if you want to add the token to MetaMask, the easiest way to add the token to MetaMask, if you can't find it in your MetaMask, is just click the MetaMask button here. So we're going to go back over to the website now and we'll have a look at the team. I'm on the team page now, so I will I'll leave a link for this page specifically in the description below. It is just in the main top tabs. The link is there, but as I've said in previous videos, it's very important for a project to include their team on the website. It adds an extra level of trust, and also it's a warning sign when you don't see it. So it should be a general standard, and it's a good rule to go off. They should have the team there. So here we have just some with the co-founder, fintech strategist. We've got devs, business consultants, digital marketing. We've got all their LinkedIn's. Here's an interesting one as well. One of their tech advisors. Here we have a section here, their inverse advisors. One of their tech advisors, he was the CEO of Ferrum Network. He worked at Amazon, Microsoft, and Bloomberg. They have marketing advisors, strategic advisors, and so on. So all of their LinkedIn profiles there as well, so you can go and look into them. I like to point this out when a project does have it, and if you see that I don't point it out, just take that as it is. I don't like when they don't have it there. So they have this there. I'm going to leave, like I said, I'm going to leave a link for this page specifically in the description below, so you can check out the team if you want to. But I think that is it for this video. We're taking a look at Project Inverse, and a unique thing where you're going to be able to staking where you hope the price is going to go down. So I'm interested to see how this can be used as maybe a possible hedge, and if especially with the lockup times and the percentages. So it's going to be an interesting project going forward, and I think this could have real growth opportunity when we do get into a bear run. I wonder if the percentage rewards will be reduced when we get into a bear run. That'll be interesting to see, and I'm also looking forward to seeing how, if I can implement this as a possible hedge when trading long. But that is it for this video. Thank you for watching Mad Crypto. Bye bye.